It took me over 5 years to make over $9,000 in profits in a single month trading. Today, I'm gonna walk you through the 4 steps that if I had followed when I first started out, would have got me there 10 times faster. When I first started out, I'd watch videos exactly like this one. Always looking for some quick tip or shortcut, but that mindset really slowed me down. So I challenge you to really listen to everything I say. The real breakthroughs aren't hidden in the bullet points. They are understanding the nuances and the little steps that are inside each bullet point. Especially the last step where I'm gonna show you exactly how to scale your trading account. If you just skim it, you'll likely miss out on key steps that actually make it work. Now, the first big bullet point is quantity over quality. This can seem super basic when you first start out, and in some sense it really is. But I know from experience and teaching other people how to trade, everyone goes through that process of, okay, I've heard that, it makes sense. But the reality is everyone approaches trading in the wrong way of trying to be reactionary to the market and what it's doing. When I first started out trading, I tried to look at all the moves in the market and try and see how I could capture each one. If it was a really strong setup or kind of an okay setup, I would still take them. Because what I wanted to do is I wanted to capture as many moves as possible. And what I didn't realize was instead to really become consistent over time, and it took me years of losing to have this really driven into me, is you don't need to be taking 20 trades in a day. You can take 1 trade a week and be consistently profitable over the long run. This is a marathon that you are starting or trying to do. Treat it like one. You do not need to be treating it like a sprint. It's all about timing when it comes to it, and some days or weeks are just not good for trading. It's all about trying to have it fit how you want to trade. Especially when it comes to when you're first starting out, treat every trade like you're in a really big account or like it's real money if you're starting out on a demo account. If you wouldn't take that trade on a real money account or a really large real money account, don't take the trade, because the reason why you're taking it is you think it's not that big of a deal, and the idea is, it kind of might work out. The only trades you should be getting in are the ones you really, really believe in and that you know are gonna be really, really good. I've done that countless times where I get in a not great trade, I still wanna jump in and try and capture that move, because what if it does work out? Another big thing when you first start out is don't over risk per trade. Don't change how much you're risking per trade. Don't risk 50% of your account on one trade. What you need to do is you need to risk a small amount so your account can slowly grow over time. And as well with this is when you're in a trade and you have placed a specific stop loss based on your strategy, do not move that stop loss farther away, increasing your risk per trade. It's really common to get married to a trade to where you think it's gonna really work out and it's still looking good, and maybe the market just needs to go against you a tiny bit. And I've done that plenty of times, and every time it just makes it so I lost more on the trade, and if I got out where I originally had it, I would have got out at less, and the signal for the trade not being good anymore was where I was originally gonna get out. It sucks having a trade that looks so good go against you and not work out to be a really big winner, but that's a part of trading. You don't know when things are gonna work out in your favor. At the end of the day, we're trying to play the math game, and statistically, things are gonna work out some of the time and not some of the time, and you don't know when that's gonna be. I was micro scalping and trying to take 20 trades a day and risk a large amount to make a small amount. And I originally thought, well, if it's a short distance go for profit, well, it'll be easy for me to get that profit. But statistically over time, it made me so, my wins were really small and my losses were bigger than my wins. And what this did to me mentally, every time I took a loss, it felt horrible because it would wipe out multiple wins. It would take me 3 wins to wipe out a loss and get a little bit in the profit. And when it comes to trading, the mental side is extremely important, because every decision you make can be influenced by your emotions. And if you're frustrated, it's super easy to make bad decisions, which is something that derails so many traders from being consistently profitable. And so when it comes to your risk reward, I highly suggest starting out with either a 1-to-2 risk reward ratio where you're risking $100 to make $100. Statistically, you're break even at a 50-50% win rate, which mentally is a lot better. Same thing if I would also recommend going 1-to-2 risk reward ratio initially as well, if that's what you would prefer, where you're risking $100 to make $200. I think that's even better because you only need a 33% win rate to be consistently break even, and above that, you're consistently profitable with a 40 or 50% win rate. And mentally, it makes it so your losses aren't as big of a deal. For me, losing and having that mental struggle of, oh, what if I get in this trade and I was wrong? Having that pressure on every trade was a lot easier when I could say, well, if I lose, it's okay. I am actually, based on my risk reward, I'm supposed to lose a majority of the time, which seems really funny, but mathematically it plays out in the end. Now, before we go on to the next step, I have created a 90-day trader roadmap. This will lay out everything that you should go through and focus on other than this video over the next 90 days. It'll give you a step-by-step process of what you should be doing on the road to becoming a consistently profitable trader. I'll leave a link for it in the description below this video, or you can download it for free using this QR code as well. Now, I think the number one thing that stops traders from being consistently profitable is jumping from strategy to strategy. I did this for years. I would watch a YouTube video, take a course, and try and focus and learn on a strategy, and I would not be consistently profitable doing it. And so I would then move on to the next strategy. Well, what this did is it would start me over from step one again. In reality, trading takes a long time to become consistently profitable at. Even if you're taking a strategy from an experienced trader that is consistently profitable doing it, everyone approaches trading differently. We all have different emotions that affect how we trade differently. I get scared to jump into a trade because I'm nervous that I'm making the wrong decision. Well, maybe you're a person that once you're in a trade, you're greedy and let the thing go on too long and you give up your profits, or you take larger losses because you move your stop loss farther and farther away because you get married to the trade and want to let it play out more. Everyone is different, and so that's why it takes a long time to become consistent with a strategy. And so you have to stick to one strategy. Otherwise, you're gonna get stuck in what I actually call now a learning loop of trying to learn infinite things about the market. That's the thing about trading, is there are so many time frames, so many indicators, and what this all does is it really makes infinite ways to approach trading the market. And so how I actually ended up breaking out of this was after a long losing streak of struggling and just feeling defeated, I went back to the drawing board and said, okay, what am I actually good at? And I felt I was good at seeing where key levels of support and resistance were. I felt that I could consistently mark those on my chart and look for reversals at those levels. I felt more confident trading reversals than continuation type trades. And so what I did was then I spent a couple years developing my own style of, okay, how do I profit off of these levels that I'm confident in and then I can draw really well. And so that's where I came up with my strategy of looking for trades in the first couple hours of the US market open. And the most important takeaway of what this did is it allowed me to focus on one simple strategy. Instead of trying to capture every move or, constantly add more things to the chart, either indicators or learning more patterns to try and increase my win rate, because, logically, the more you learn about something generally in life, the better you are at it. Well, when it comes to trading, more is not better. More is actually less when it comes to trading. Learning more and more patterns or strategies just overcomplicate it, and they don't actually increase your win rate. And so that's why it's very easy for people to get stuck in that learning loop, because logically it makes sense to go learn more or learn a new strategy, but it doesn't actually work that way. And so I would highly recommend just focusing on learning market structure, not really using indicators. You can use one or two, but do not have a ton of them. The simpler, the better in the strategy, I think, because there's so many variables when it comes to trading. If you have too many things you're trying to check off on your list to get into a trade, you're never gonna get into a trade, and it's gonna be impossible to start tracking. And when you start journaling, which is something I highly recommend you do, to actually figure out what's working and what isn't, because there's gonna be 15 different things that you need to be working or not working, and over time, that's gonna be impossible to really know what's making you consistently profitable and what's not. But what I highly recommend doing with your strategy that you decide is you need to write out a plan. You need to make a trading plan to consistently follow what you're gonna be doing every day, your trading routine, what you're gonna do before you open the charts, how you're gonna look for trades and prep for finding those trades. And then once you are actively trading and you're in a spot where, okay, what do I actually do when I jump into a trade? You know, for me, I have like a 4-step simple checklist to jump into every trade that every trade needs to match. And then when I jump into a trade, where's my stop loss going? How much am I entering per trade based on my account size? And then where is my profit target gonna be? Am I gonna do a 2-to-1 risk reward ratio? Am I gonna go to break even at a certain point? You need to have all of that laid out, and not just up to getting into a trade. You need to have rules on how to manage a trade as well, because once you're in a trade and there's real money on the line, or you know, even if you're demo trading it and you're taking it very seriously and it's still intense, you're gonna become more emotional. And if you don't have a trading plan structure to follow, you're gonna end up emotionally trading and making a decision based on your emotions, which is not gonna be consistently profitable for you. And it's generally gonna lead to the bad decision. Now, the most important step when it comes to building your trading account is how you properly scale. Now, I've traded just about every asset there is out there. I've started trading options, I started trading stocks, and what I've landed on after a long time and what I've realized works out the best for starting a small account and slowly growing it over time is trading the futures market. I'll leave a video up here that it really goes into detail on how futures work. I don't want to get into it in this video, but the idea is that you can start out with risking about $20 to $30 per trade, depending on the volatility of the market, and you can slowly use that to scale over time. They give you a ton of leverage as well, which is important to growing a small account or even trading a larger account as well. And so the key steps that I would follow is to start out demo trading first or practice trading with fake money, no matter where or what strategy you are doing, because I find so many students jump into real money right away, and there is so much about trading that you are just learning. Even just learning the platform, you're gonna make mistakes, and mistakes in trading loses you money. And so the switch from going from demo trading to real money, or let's say a prop firm account, is I highly recommend waiting until you have consistently profited for at least 2 months. Now, the reason because of this and that kind of lengthy time is the markets, no matter what strategy you're trading, the markets are constantly shifting. And no strategy is good in every market. There will be people that trade my strategy that do really good in, let's say, a month time, because the market is having really good back and forth reversal trades, and every aggressive signal works out really well. But then let's say the market patterns start to shift, the market starts to get a little slower, less volatile, and that trader now is used to saying all those patterns work in a certain way, and they're not able to realize that the market has slowed down and they need to shift how they approach the strategy slightly. They need to be a little more patient and wait for a stronger, more clearer setup, and realize that taking that aggressive entry doesn't actually work anymore. But instead, what happens is they take that aggressive entry day after day when it's not working, and they start to blow their account and give up all the profits they had. And now they realize, okay, the strategy just doesn't work. And they go back to the learning loop and they try a new strategy, or try and figure out something that doesn't work. And so that's why I highly recommend trading and finding that consistency for a couple months on a demo trader, because you're gonna go through multiple market cycles in that time. You gotta remember there is some luck involved with trading, because it's just statistics at the end of the day. And if you're, just have a good profitable week, well, you can't just say, okay, I'm a profitable trader and boom, let's go off and, now risk $50,000 on a trading account. Now, once you are confident in your trading and you make that switch, either switch to a prop firm account if that's what you want to do, but I highly recommend starting out with a real money account first with a small amount of money. Because what this does is it slowly introduces emotions into your trading, which is the second key part of becoming a consistent profitable trader. And you have to learn how to trade with those and manage those as you're trading. Trading on a demo account isn't gonna allow you to really unlock that full emotional side of trading. And so allowing yourself to start out with a small trading account and risking, $20 per trade is what's gonna ease you into that. And then what you can do is slowly scale over time. When it comes to account size and risk per trade, I wouldn't suggest risking more than 5% of your account per trade. When you're starting out at a micro scale, it's kind of hard to go a lot less than that. But as your account goes bigger, you get down to risking 2% or 1% or less than that. Risking a small amount of your account allows it so you are less likely to blow up your account by going on a bad loss streak. And when you're first starting out, you're gonna struggle to control those as much. And so you wanna give yourself that time. Remember, this is a marathon. You wanna give yourself that flexibility to be able to bounce back and stay in the game of trading. And so that's why I highly recommend trading futures for starting and scaling over time. The trading platform I recommend and have used for every day for over the past 5 years is called NinjaTrader. It's super easy to start demo trading and scale your account over time, practicing your trading strategy. I'll also leave a link for that in the description of the video, or you can check it out using this QR code. And speaking of strategy, I made a little over $1,300 this morning trading the exact strategy I look for every day. I want to quickly walk you through what that is so you can kind of see what it looks like trading my strategy and how I consistently profit off of just one specific pattern every single day. And so to zoom back here, I am trading the NASDAQ futures market. This strategy really works on any market or time frame, because all I'm doing is reading the candlesticks and looking for, key levels of either resistance or support in the market. And that's all I do when I first start out. Again, going back to when I first started, what I realized I can be good at is looking for key areas of resistance or support and then trading based off of those. And so this morning, what I did was I came in and said, okay, well, I see the markets on a larger time frame has come up here and bounced twice. It actually had a little bounce here as well. And so I decided to kind of keep track of that swing as well. Because the market moved up pretty quickly, well, it could reverse if it comes into a minor resistance level as well. And so that's all I do when I first come into the charts, is I look for the market to come up into a resistance or come down to a support level, and then, capture a swing off of that. And so then I'll go into either a 1 minute or a 5 minute chart, and I'll look for a pattern to get in based on that. And all I do is, the first thing of that pattern is I want to see a big move up into that level. The idea is for a reversal to happen is the market has ebbs and flows in it. A healthy trend will have pullbacks in it before it continues higher. Well, an unhealthy trend often looks like this, where it just goes straight up in one direction. And what that causes, well, it causes a rubber band effect. It needs to become healthy again. And how it does that is it has a pullback. As it comes up into this level, what I'm doing is, okay, I'm seeing that it's had that unhealthy move and it's started to slow down based on just seeing these candlesticks start to chop. It's not really anything super fancy. You're just looking for that momentum to basically level off. And then what I like to look for is a few key patterns in terms of candlestick patterns. I use a couple different ones, But generally what I look for is a double top. You can see here it makes one high. It has a bit of a pullback with this big bearish candlestick, and then it has a second high. So that kind of makes a double top. And for me, this candlestick right here was a really good signal because it showed that the market essentially had a top, it attempted to break out, and it failed. And so what I did was I put my trade below that candle and then elected to get filled once it broke that low. And so what I'm doing here is I'm shorting. I'm essentially betting that the market goes lower. I make money when it goes down. You can do this in either direction. That's why it works so well. Often I actually find the trades to the short side actually work better just based on how the market moves. But then essentially I just put my stop loss above kind of the swing high here and this double top. And then from there, I'm looking for it to give back up this move. And so as an initial target, maybe it comes down here to this swing low here. That would be great. But it also, the market opened right here and just took off. And so I think that this is an initial easy target. That's why I put in a order here for actually half of my size. And so I'm risking about $750 here on this trade, and I'm looking for about 2 times my risk. And so this level right here is at 2 times my risk, keeping in that, solid risk reward where this doesn't have to happen or work every time for me to be consistently profitable over the long run. And then from there, it's kind of just letting things play out and waiting for the market to move. And so from there, if I just zoom forwards here a little bit, because it is on a 5-minute chart, you can see it moved down pretty quickly. And that's how that rubber band effect works, is it essentially moved up here and then snapped back to this area. And so I took half of that trade off, captured about, $750 because that's half of 2x and half of my size off. And then from there, I thought, okay, if we rip down to this level, I'll probably take off the rest there, and that would be a sick trade. But if we come down here, and it's likely that we find support down here because that's kind of that initial spot where it's given back that rubber band. I also move the rest of my trade down to here, which was essentially 2 times my risk in terms of profit. And essentially my plan was to use a previous candlestick high as a trailing stop. It made this big move. If it gives that all the way back up, I'm happy to get out there and move on with my day. And so it closed, it knocked me out there. And if I just pull up the actual chart from that day to kind of show you what happened, is it pretty much bounced there and started to chop around. And so that's why it's really good to get out on limit orders and again, not get greedy. And this is stuff that you're gonna have to learn how you trade and deal with. I highly recommend scaling up over time slowly. Start demo trading on something like NinjaTrader. And as well, don't forget about that 90-day trader roadmap that I mentioned that will lay out even more of this process that I highly suggest that you go through. If you want to learn more about my strategy and how I consistently execute this strategy every day, check out this video right here. It'll go into way more detail than I have here.